can you guys hear me all right? Test, test, test. Awesome, guys. So listen, this is the first newbie webinar specifically for new traders. So I just kind of want to lay out what my thoughts are, the way I want to take these, and this will definitely be the first of many. I didn't really even realize the response I would get from this. So you know, again, if somebody's watching this later on, I'm going to do a bunch of them. I'm going to try to switch up times for you guys. I want this to be as basic as possible. So, you know, I already have questions and emails, which I'm going to start to give you guys an idea. So if somebody asks a question and I tell you I don't want to answer it right now, it's because I might think it's too, you know, too advanced for what I'm looking to do with these webinars. So, you know, again, I'm looking for you guys to type your questions in the chat. Do not be shy. Anything goes. I'm going to start with something with just how to navigate the site a little bit. I'm gonna speak about how to set up your charts a little bit. So I'm really gonna cover the basics, guys, and that means, you know, if you're confused about even what a pin bar is or what an outside bar is, you know, I know this material does exist on the site, and I know maybe some of you have seen it, and you know, a lot of things will be refreshers for some of you, and some of you are brand new and you don't know this yet. That's what I want these to be, though. I want this to be a very safe, comfortable environment. I don't want anybody to be shy asking a question or asking me to go over something again. You know, this is exactly why I wanted to do these, and I'm really excited to do these, and hopefully they do help new traders, and you know, maybe some old traders too will get a little bit out of this. So again, ask your questions, type it on the chat. I'll read them aloud. As always, these webinars are recorded, and I'll just start working from there. So again, guys, don't be shy about asking your questions, whatever they are. You're going to see I'm going to go over some really basic stuff, and as we do more of these webinars, we'll slowly, you know, get a little bit further and then hopefully get everybody caught up to speed with my normal everyday webinars or the ones I do weekly. So I got a bunch of email questions. So let me just sort of read through them and we'll work from there. And then, you know, again, you guys can ask your questions too. So one of the questions I got was, you know, Mike, I'm new to the site. Where the heck do I start? And this is a super common question, and there's so much material on the site that I know a lot of you are, you know, it's overwhelming, and I understand that. And one thing I always say is don't let it be overwhelming, because the material's not going anywhere, and that's part of the process. There's no A, B, C, D, and then you learn to be profitable. It's concepts, it's repetition, and it's sort of you discover your own way that's most comfortable for you. So I'm going to pull over the site. So hopefully you guys can see it here. Everybody should be able to see my screen okay, and hopefully you all can hear me all right. So again, the most basic place I would start is, first of all, just get yourself familiar with the site. This is the members area. This is the main page. This is where, you know, previous materials archived. Some videos are archived. Webinars are archived. Again, you know, if you're looking at James 16 stuff, you know, here's the text tutorials that James does. Here's past text examples. This is from the previous older site we had, which was just a forum on Forex Factory many years ago now. Again, and then webinars are archived, instructional videos. And again, this is part of the site. You know, the large majority of the site exists within the forum. And I think people, again, it's tough for some people to keep up with it, but you know, you do want to get to this. This is where a lot of material is. Again, for me personally, most of my material is here. A lot of the senior member instructors, their material is here. So don't ignore the forum. That's really what the core of what this site was built around. Again, I just wanted to give a basic idea. You know, again, you're looking for money management, Fiji section. You're looking for my webinars. You know, again, just browse around. It's really the best way to get familiar with things for the most basic. Why I'm really bringing this up is within the forum. So let me pull up the forum here. Again, you know, it's pretty self-explanatory when you go through slowly. You know, you have James's material. Let me just shift this over for you guys. And you know, you go down the way here. You have my stuff, Fiji Trader, Seeking Light. You know, right down the list here. Again, I'm sure most of you have been through this a little bit and see where this is. The reason I'm bringing this up is I wrote a post out for those of you who are new and are just baffled of where to even put your toe into the water here. So let me just get this link out. Okay, sorry about that, guys. So what I'm looking for, why I brought this up is within my section here. So again, you can see I have the beginner instructor, and Of course, as well, I do my own material. So I have my ongoing material and my emails I send out. They're archived here. So there's just a lot of stuff here, and I understand that. But within the beginner section here, the beginner video and text tutorials, I wrote a while ago a little text tutorial here under right here, beginner facts regarding trading. Start here. And I always reference people to this post if you're really new to the forum. There's a bunch of posts in here, but the first one I happened to do was a post on where to start. So the question is, help, where do I start? And I laid out just a basic foundation of how I would get familiar with the site. And the more you become familiar with where things are located, or where instructors' material is, and just a general feel for the site, you're going to get more comfortable, and then over time, you'll be able to feel like you can find things that you need, or explore areas that you're looking for. But this is a really good post for those of you who are just really very overwhelmed here. So again, it's in the forum, and obviously it's on video here, but if you can't find it, just send me a message as always. So again, just consider maybe going through in this manner. It's basically how I would tackle the site if I was new. And again, it's really about getting familiar with things, and from there you'll sort of find your own way and go to the areas that interest you most. Alright, so again, I have a bunch of questions here. If you guys have questions as I'm speaking, again, type them out. Don't be shy, even if they seem silly. This is for that reason. This is for the reason for those of you who are too nervous to ask a question. Even if it's something, where is this or where is that? That's what I want these to be. So I'm going to keep going through the questions I have in email. Again, don't be shy to post up your questions. So, all right, the next question I got is, let me just pull it up. It's about Mike. I'm not sure how beginner this is, but I thought it would be helpful if you can show me how to set my charts up. I've got mine set up okay for how I like them, but things like identifying big round numbers, or how to put on the MACD, what type of zoom I should use, I'm just very confused about. Maybe you can go over that. So I think this is, again, these are the type of questions I'm looking for. I want you guys to not be nervous about this. So I opened up just a basic chart here on MetaTrader. And again, this may or may not be what your chart looks like when you open up a new one. I just sort of, opened up a new one here. So again, keeping it real basic, I like my charts very clean. So the first thing I would do personally is just get rid of this grid here. So again, MetaTrader or whatever broker platform you're using, or charting platform, it's about getting familiar. And the more familiar you are with these things, just like the trading topics that we'll go over, the easier it gets, because you don't feel overwhelmed. So again, for me personally, this is how I would set up my charts. I would first of all get rid of this grid here. So if you just simply right click your chart, it'll pop up this box. You have templates and periods and zoom in, zoom out, volume. So I just pop off this grid here, and you can see there's still these lines down. These are period separators. These separate depending on the time frame. This is a week, since we're on the daily time frame here. So each of these represents a week. Again, some of you might like keeping that up. I personally don't. I like to get rid of it. So if you just go down to properties, again, right click the chart, go down to properties, and we will just pop that up. Again, another box will come up. Now this is where you can customize, what your candles look like, what your bars look like. For example, first of all, let's get rid of the period separator. So if you click the common tab up here at the top, and you just uncheck show period separators, click OK, and boom, they're off. So now we're sort of with a basic chart here, right? Again, it's up to you to decide what your chart looks like. Everybody's going to have a little bit different. This is sort of just what I like to use. So now if you want to go to properties again, and you want to change the colors of your bars, maybe you want all down bars to be red. So I'll go ahead here, click the down bar, just simply change it to red, and click OK. And again, now you can see my bars are green for up, red for down. Some people like all different kinds of colors. Again, I'm not really too picky with that stuff. It's sort of whatever I feel like. One thing's not better than the other. Then the person was also asking about the zoom of the chart. So that's one thing I as a common error, I think. I'd say most people open their charts and they're zoomed in like this. Or I get a lot of emails with charts like this, or see people posting charts like this. This to me is way too zoomed in. It's going to skew a lot of what you're looking at. So bars are going to look bigger. They're going to look more significant. it's going to be more difficult to identify areas because you're so zoomed in to your chart. Now again, this is personal preference. I know people who trade with their chart this zoomed in. I know people who trade with their chart like this. So again, it's about finding what's comfortable. I personally like a zoom that's like this, sort of in between both. So again, just click your zoom here, zoom in, zoom out. Again, there's hotkeys too, and find what's comfortable for you. I think it's better to have sort of a better overview, so you can kind of get perspective of things. So that's, for me, basically most of it. Now, again, if you want to go ahead here and add your moving averages or add your MACD, again, that's another thing you can do. I'm not sure I'm going to be able to get it up here, but if you click the indicator button, so let's do this actually. Actually, I'm not going to be able to get it up here the way this is zoomed in. But again, to add your indicators is very simple too. You're just going to go to the indicator button at the top of your screen, or you can go to View Navigator. I don't know if you guys can see this over here. See, if you view the navigator, you can also do this as well. Again, this stuff is I know it's basic, and some of you are looking to get right into trading, but this is the kind of stuff that holds people back a little bit. So again, I'm going to pop up my MACD. So here's the MACD. Once I click it, it opens up this box. Again, I leave everything on standard here. Click OK, and boom, it's added to your chart. Now, if I don't like to have my MACD up like this, all big, or here, I keep it minimized as much as possible. And the times I need to pull it up, then I'll pull it up and look at it. So again, I'm trying to keep things as basic as possible for me, and that's sort of is integral to how I trade personally. Again, same thing. You can go ahead and add your moving averages. So you go ahead, add a moving average. Again, you want to add exponential if you're following James. Put your period in here. So we want to add, say we want to add the 150 moving average. We want to make it orange. Go ahead and put it in, and then boom, it's on your chart. Real simple stuff. Now, after you do that, again, you might want to save that template. So you can go ahead here, and you might want to apply this to all your charts. So you want all your charts to look like this. You would simply go in here to Template, click Save Template, pop in the name, 150 moving average. And now every chart you want to look like that, you can go ahead and right-click that chart. So if I open up another chart here, so here's another chart with my personal settings. But let's say I want to put that setting back. It's real simple. I go to Template. You'll find the one you want. Here's the 150 moving average, and boom. Now you have that set to that. So again, these little things, they're simple, but they're also very helpful, so you don't have to spend all that time doing that. Now, again, other people asked about the big round numbers. So here's my template that I use. And again, you'll see, look how it automatically popped up these big round numbers. Again, I love that. That's all I keep on my charts. So that's where I start with my charts. That's where I finish with my charts. Just very blank. Again, moving averages, whatever else you guys want to put on your charts, that's absolutely fine. This is an indicator, though. So I get a lot of questions about, how do I get this on my chart? If you message me, I will send you the indicator and how to put it on your chart. So you can see here, I brought up the indicator box, and right now you can see 2 grids on here. And basically all it is you set your settings, which again I'll explain to you guys if you're interested in that. Again, you pop it on your chart, and boom, you're done. And I just save that template. So now every time I open my chart, it's going to have that. And that for me is an easy reference point. So I can always do that and sort of be already close to set up. So again, real basic stuff here. We're just setting up our charts. Nothing too fancy, but again, this stuff saves a lot of time. All right, so let me see. All right, no questions about that. Again, if you guys have questions about this stuff, I know this is very basic, but again, this is really where I wanted to start with these. So let me just keep going through some of these emails here. All right, now we'll get on to a little bit more information regarding actual trades and some of the material that is probably why most of you want to be here. So let me just fix this a little bit. So the next question I had is, you have explained all the bar types: bullish outside bar, bullish bars, inside bars, etc. But I cannot figure out, when you see this pattern, how should I enter a trade? What's the stop loss? What's the take profit? Those are not clear. So a question that seems as simple as, where do I put my stop and where do I take profit? This is where some new traders are confused, because as a discretionary trader, as trading price action, there is no right, there's no wrong. So I can't tell you you need to start here and you need to finish here. That's unfortunately the side of this business that really doesn't exist as a price action discretionary trader. A lot of it, there's multiple ways to do things. There's multiple ways to enter, multiple ways to exit, and that's part of the process. Now, there are good starting places. And again, a lot of this material is in the forum. I'm going to go over it here again, but I just wanted to show you guys. So I'm going to bring back up the forum here. And again, I'm going to take you guys back to my section, the beginner section. So again, I have, video and text tutorials, a beginner open forum. If you go ahead here and click to the beginner video and text tutorials, you'll see I've done a little few things here for you guys. And I have one thing that says types of entries on a break, on a retracement, a close, or a touch, which I will go over these, and types of stop loss placement. So if we're looking for ways to enter a trade, so you spot a pin bar, you say, how do I enter that trade? Well, here are some different ways to do that. Now again, I enter a lot of my trades on the break of the bar. A lot of people enter their trades on a retracement. Some do a combination of all of these. Again, there's no 100% right or wrong. This is part of the learning process, part of why we demo and why we get used to things and learn things. So just as you're going to get better at spotting bars, you're also going to get better at understanding how to play these bars and what the best course of action is for you. It takes time. It's not something that comes overnight. But again, it's really not complicated either. It's simple stuff that we need to do in repetition. So again, if you're interested in a little bit more detail here, you can go ahead and come through this section here about where to enter, how to enter. And again, I thought I would just go over some of these real quickly and give you guys an idea of what I'm looking for. So I'm going to pull back up, though, a chart here, because I got another question that integrates well with this one. And the question was, Mike, again, I'm struggling understanding where to enter my bars and how to spot my bars, what makes up a good bar, etc. So I figured I would start here, and then we can start to branch out into some of your all of your questions here, because I think this will start to trigger those questions. So let's start with understanding what is a pin bar. So that's where I want to start with this, and then we'll take it to how can we enter these bars, and also how can we manage these types of situations. Now, I'm keeping it really, really basic to start with, guys, and understand that that's where you have to start. You have to start with that foundation. So I got emails, and the one email from somebody was this. It said, Mike, thanks for arranging this. I really appreciate this. Right now I am back testing pin bars. So far, these have been my rules. There must be a clear trend. Take pin bars at swing highs, swing lows. Don't trade into a big round number. The size of the pin should be significant, and there should be space. So that's a lot. There's a lot of topics there we can cover, and some of them more advanced than others. What I want to say to you guys, and to answer that question for that member, and then later on we can go into more detail if we get there, is trading, again, is not really a checklist for a lot of what we do. Now, that doesn't mean having an idea of things to look for, like bar size, or how a bar closes, or the location, etc. That's all important, but I don't have a checklist that I have on my wall that says, 1 through 12, if I check them all off, I take the trade. Unfortunately, I don't think that really works the best. Because I believe in being flexible and understanding the situation. So sometimes you could have a checklist where 11 out of 12 things look good, but one thing can throw you off. So what you guys have to realize is while you start out, it's a good idea to try to put these things into perspective and try to give yourself a little bit of a checklist saying, I should check the bar size. I should check the close of the bar. Where's the location, etc. What I think happens, though, is a lot of you who are new, you get hung up on just the bars, which I did, everybody did. You open your chart, you see a pin bar, and you look to buy and sell. That's really a good starting point, but the finish point, and again, I'm not going to go to the finish point now, I'm just going to tell you about it, is understanding the context of the bar and the story that bar creates. So we want to take that bar, where it's located, blend that all into how are we going to enter it, how are we going to manage it. Again, that's more advanced stuff. That's stuff that I go over in my material, James does in webinars. Let's get back, though, to the basics again, how to enter a bar. So Ron said, what is a break of the bar? So that's a good starting place. And again, I want to start with your questions. Selinko, again, if I pronounce your name wrong, guys, I apologize. I'll get to your question too in a little bit. So what's a break of the bar? Well, first of all, let's understand and let's find a bar that we could trade. So this is a pin bar. So what makes a pin bar? And again, I know this is basic for some of you, but this is where I really want to start. So a pin bar is simply when you have price move high up in one direction and then close back down originally where it started. That's what creates this tail here. So this is a pin bar, right? We have the open and close within the prior bar, and we have a nice long nose here. So that's simply a pin bar. Now, again, there's big pin bars like this. There's small pin bars. Let's see if we can find one like this guy right here. Super small pin bars. Again, not all bars are created equal. Not all locations of bars are equal. But when starting out, you want to be able to identify these bars. So, we can go over today if you guys want. What are each of the bars? We can go and identify them, pick them out, and sort of start from there. But initially, when you're learning this stuff, guys, it's a good thing. Go open a chart. Open any chart. Go through each and every bar and mark off what it is and see if you're right. Again, if you're confused, post up on the forum. Say, is this a bullish outside bar? Is this an inside bar? I'm confused. That's the way to learn. That's, again, you got to start small and work your way up. So, again, let's start with this pin bar and use this pin bar to identify different ways that we can enter a bar. And one of the things about these bars is, generally speaking, we can play them all the same way, meaning we can play them on a break, which we'll go over. We can play them on a retracement. We can play them on a close of the bar, etc. So again, let's use this bar. And I'm going to go and start basically without even speaking about the location and why this is a great bar. We can come back to that a little bit later. So what is a break of a bar? Well, technically speaking, this pin bar is not valid, meaning it's not actually a playable, valid pin bar until it breaks. The break of it means when this low, so sorry guys, let me just get this information out. Okay guys, sorry about that. I just want to make sure we get everybody in here. So a break of the bar is when the low of the pin bar. Now the pin bar, and I get this question too, is this bar here. It's this big long nose tailed bar. It's not this previous bar plus that pin bar. That's part of the requirements. But the bar you want to focus on once you identify as a pin bar is the actual bar itself. So when this bar closes, so not before it closes, once it does close and the next bar starts, which this is a Sunday bar, so we ignore that. But anyway, once that next bar starts, then we can say, all right, there's a pin bar forming. Now, I want to trade it on a break of the bar. So again, what does that mean? Well, if we look at the low of this pin bar here, this is not valid until this low breaks, meaning price moves under it. That doesn't mean now we have to wait for this next bar to close. It simply means when price opens here and is moving up and down, right? When price crosses the underside of that bar, the low of that bar, that is a break of the bar, meaning now that pin bar is validated. Now again, another common question is, well, where do I put my entry if I want to take a break of the bar? Do I set it 1 pip below this bar? Do I set it 3 pips, 5 pips, 10 pips, 15 pips? Again, this is part of the understanding and learning what type of trader you are. So what I do personally is I like to use what's called a buffer. So the term buffer refers to, I want to put my sell order in this case X amount of pips below the bar that I really know price broke through. So if we just put our our sell order 1 pip below the low, it's very easy for price to nick us in and turn around. I want to know that price really truly broke that low in a strong manner. So for example, on a daily chart, I might use anywhere from 12 to 20 pips below the low. So I want to put it under the low enough where price breaks it. I know it broke it solidly. I don't want to get nicked in by a pip, which can still happen with a buffer, but I want to really know that that low is taking out. So again, that's a break of the bar. So let me see. If anybody has questions on what is the break of a bar, because that's a term you're going to hear over and over and over again. Okay, so Ron said, can it be the subsequent bar beyond the very next bar? So what Ron's asking is, say this next bar here, this red bearish bar, right, guys? Let's say that did not break the low. So let's say instead it formed, you know, a bar that sat here. Is it okay and is it valid for that bar after it to break the low? And the answer is yes. This is the technical way we define a pin bar is it's not valid until the low is taken out, whenever that might be, and it's not invalidated until the high gets taken out. So again, let's say price doesn't break the low on this next bar, doesn't break it on the next bar, the bar after that, 10 bars go by, and price is stuck in a range between here. So it never breaks that low, but it also hasn't broken the high yet. So technically speaking, this pin bar is not valid and it's not invalidated. So you could absolutely leave your sell order under here. Now let's say before price breaks, it comes up and takes the high out. That bar is no longer valid now. So it's no longer a pin bar. And again, that might seem weird because is it a pin bar here? Yes, but it's not a validated pin bar. And this is also part of understanding where you're comfortable entering. For example, again, if you guys have questions as I go through, please slow me down because I don't want to go too fast on this stuff, and it's going to take me a little bit of time to readjust, you know, the very basics here. But again, another way to enter a bar, for example, is on a retrace. So a retrace of a bar means looking for an entry before the low breaks here. Okay, so RG said, can I zoom in? So I'm going to zoom in here, guys, so you can see a little bit better. Again, remember, though, this is not the zoom I like to keep my charts, but that's a good way that we can get in here closer. So a retrace of a bar would be before price breaks. Well, not necessarily before, but let's define it now. So before price takes this low out, a retrace of this bar could be anywhere price moves higher, right? So if, for example, this bar here, this little green bar, moved straight up, we could take a retrace entry at any point here that we feel is significant. So what a lot of people do is they'll put a sell order up here. So again, this bar is not validated yet, but a lot of people like to get in on these pullbacks. So a pullback, a retrace, these are common words to just explain price moving the opposite direction of where you're eventually looking for it to go. So let's say this green bar here drifts up higher, and we want to sell up at this point, the left eye. So the left eye, and again, we're going to get through these terminology as it comes up. The left eye of a bar, of a pin bar, is simply the high of the previous bar. So here's our pin bar. The left eye is that high. So a lot of people like to say take a retrace to that left eye because that's a lot of times a very logical place for price to reverse. So if you put a sell order up here while price is coming higher, that's a retrace entry. So let's say now price nicks you in and falls down, well then that's great. But then there's the other scenario where if you take a retrace entry, price has not yet broken the low, remember, so it's not a valid bar. This is, again, everything that you do is a trade-off. There's advantages to things and disadvantages. So an advantage to a retrace entry is you get in at a better price, right? Does that make sense? If you're selling up higher, you're going to get in at a better price than somebody who sells a break of the bar. So that's an advantage because in turn, you can get a bigger position size. Again, that has to do with money management. We'll get into that maybe today, maybe next time. So that's an advantage. Now, can you guys tell me what is a disadvantage to getting in on a retrace? So does anybody, and again, if you've been around and you know the answer, let's see if we can get some new folks in here. So what's a disadvantage to getting in on a retrace? So Walter said a higher risk. Well, that's not actually the case because if we use a fixed percentage of per trade, so let's say we risk 2% per trade. If I start, and again, I know I'm sort of jumping around here. I don't want to confuse anybody, but you know, this is good stuff. So if I sell a break of the bar and we can speak about stop loss placements after, but let's say I put my stop above the bar. That's the common way to do things, guys. A sell below the bar and a stop above the bar. Again, this is to validate the bar and to protect you from the invalidated bar. My risk then is going to be spread out at this area from this lowest point to this highest point. So if I risk 2%, my 2% is risk within this area here. Now, if I get in on a retrace up here, okay, at the left eye, and I put my stop above the high still, I'm still risking 2% per trade. But now my risk is spread between this area. What that does in turn is gives me a bigger position size. So that's the only thing that really changes in that respect. Now again, that's one of the advantages of a retrace entry. You get a larger position size. Your risk isn't greater. Your risk is still 2%, 1%, 3%, again, whatever you define that to be, but you get a bigger position size. So now if price starts moving lower, I'm going to have a larger position than if I got in down here. So does that make sense to you guys? Does anybody not understand that concept? That's a little bit more near money management, which maybe we'll sort of put to the back burner for now. But again, let's get that up there. So let me read your other comments here, guys. Okay, so Neb said no break. Walter said not validated. Frank said momentum against you. Okay, these are all great answers. So the one that I really wanted to focus on was the disadvantage of taking a retrace entry is that price hasn't validated this pin bar yet, right? So what do we say? A valid pin bar is when the low breaks. So price could easily come up here, hit your sell entry, and keep going higher, and then take out the top of that bar. Now, that's not wrong at all, but what it means is that if you take a retrace entry, you may or may not be trading a valid bar yet. So if price reverses at your entry and comes down and validates the bar, you're now in a valid bar at a very good price. But if it continues higher and takes your stop out, again, you'll take a loss, but the price was never validated. Now, of course, the same thing could happen on a break of the bar, right? Price can come down, hit your entry, validate the bar, and turn around. So again, there's the trade-off. I like to trade validated bars. It's something I'm comfortable with. I consider taking a break of the bar the easier, more conservative approach to trading. But that doesn't make that right or wrong. And again, I know that aspect of trading is tricky for some people because, you know, a lot of people wish I could say, do this, do that, and then you collect your profit. Unfortunately, it's about finding something that works for you and taking all these individual concepts and melting them into something that works for you. And that's why we have different instructors teaching the same material, but in their way that's comfortable for them. Okay, so let me just catch up with your comments here, guys. Okay, so Ron said, again, what is the disadvantage? Bottom line is the odds are not as good. No, that's actually not the case, Ron. So our odds are not necessarily better if we take a break or if we take a retrace. It's really almost irrelevant. It's more what makes sense to you in that specific, for that specific trade, or that, the way that you want to enter the trade. It's not necessarily that one is better than the other. Now, there are times when one might say or make the argument that a retrace trade makes sense because there's a lot of confluence at the retrace area. But we'll get into that later when we start to get more advanced ways of looking at this stuff. So for now, I'm going to keep it basic. Again, this stuff is all covered in the text tutorial. Probably better there than I'm covering it here, since this is a little bit getting used to this myself. But again, let's just recap real quickly here. So we have an entry on the break of the bar, right, which would be taking out the low. A retrace entry, which would be a retrace point. Now again, your retrace point could be, you could go ahead and throw up a fib. So you could take a Fibonacci of the bar and say, well, I'm going to take a retrace entry at the 50% retrace mark of this bar. So there's multiple ways to do things on a retrace. And again, same thing with the break of the bar. There's more to it than that, but this is the basics and a good way to understand, how you might approach some of your entries here. So that's two ways we covered. A third way you can enter a bar is on the close of the bar, and that's real simple, right? So when this bar closes, so my candles or my bars close again. Again, these can be interchanged, guys. We can make these bar charts, we can make these candles. I just happen to like candles better. It's one and the same information exists. I probably should have gone over that first. But a close of the bar is real simple. My bar closes at 5 p.m. Eastern Time. Right now it closes at 6, but I use a broker for 5 o'clock. So when this bar closes, you could simply sell on the close. Now, what would some of the advantages and disadvantages be of entering on the close of a bar? So again, always a trade-off. There's always a trade-off. So who can name an advantage of entering on a close? No takers? Don't be shy, guys. It's okay to be wrong. And oftentimes there is no right and wrong either. So David said you hope to get momentum. Ron said having a clue. All right, well, you know what? This is sort of a trick question because in my opinion, there's not a whole lot of advantage to taking a bar and a close. So Selinko, again, I'm Selencio, you have to tell me how to pronounce it. I'm going to call you S and we'll get that sorted. Said, same as a retrace. And again, I don't really think there's a huge advantage to entering on a close. I'd rather enter on a retrace to an area that makes sense, like the left eye here, or maybe you use the close of the previous bar, than entering just on the close of this actual bar. I don't see a huge advantage. Again, one of the advantages is you will still get a bigger position size than entering on a break of the bar. A disadvantage, the bar is not validated yet. So again, a lot of these are overlapping in some sense, but again, it's another option. Some people might say, I'm always going to enter the bar in the close. It's what I like to do. That's fine. Again, like I said, this is why we demo. This is why we test. If you are new, James, myself, other instructors, we generally recommend entering on a break of the bar. It gives you a basis point to start. It's a lot easier to understand than retracements or, different other types of entries, but this is the basic. So those are the three basic ways to enter. Now there's a few other, but those are the basic ways to start. We have a break, a retrace, or on the close. So before I go on, do we have any questions about how to enter, or three basic ways that we just went over of how to enter a bar? And again, guys, no silly questions, please. I'd be more upset if somebody didn't ask a question. I love this. I really can't wait to do more of these webinars because I realize even though I might cover these things in videos and text, that this interaction will let me see what you guys are looking at too. Okay, so Ron said it's a few points below the break. So again, that comes back to the buffer. So on a daily chart, let me just write this out. Let me get a little pen action here. All right. So what I give a general idea of the buffers that I personally use. So for example, if I'm on a 1 hour chart, I like to use anywhere between say 8 to 12 pips. So I like to put my order. So if this was a 1 hour chart, I might say stick my order 10 pips below the low and then move from there. Now again, there's things to look at and that's why I have a range. I look at things like how volatile is the pair, meaning is the range very big on the pair. So a pair that moves, an average maybe 60, 70 points a day versus a pair that might move 200 points a day or 200 pips a day, I'm going to use a little bit wider of a buffer. So I might be more towards the 12-point area. The USD Canadian, pretty average pair, moves pretty average. So I'd probably go somewhere down the middle, 10 points on the 1 hour. Then on the 4 hour, I might use a range of, say, 10 to 15 pips. Again, this is just a generalization. It gives me just an idea of what I might be looking at. Again, same thing, same idea. What else is around the bar? What kind of pair am I trading? Is it very choppy up and down? Give it a little bit more room. The daily chart, I'll do something along the lines of 12 to 20. Again, same idea, same application of my thought process. Weekly, I might do anywhere between 15 and 30. And monthly could be anywhere between, say, 20 and 50. So again, the higher the time frame I go, let me just switch back to my arrow. So the higher the time frame I go, that buffer is going to increase. And that's, again, just my way of saying, all right, we really did break the bar. We really took out the low. Because, again, if you put your order a pip below the bar, that's not necessarily wrong. But generally, again, not to go too advanced, the markets like to test these highs and lows. And, they like to sort of tap into those areas and then turn around because they're good points of where orders are located. But again, that's more advanced, but this is just to give you guys just a general idea of sort of the buffers I like to use here. So does that make sense, Ron? Okay, great. So are we good on those three basic entry types? And then I'm going to go over stop losses too. So we can do basic stop losses too if you guys want. Alright guys, so again, if anybody's confused or even later on you watch this and you have questions, please post up. Great, that's great, Ron. Yeah, I know. It's funny, I get some people who really don't like videos. Most people do like videos. Some people love text. Again, I think it's awesome to have both and compare and go back and forth. And I'm a visual person too. I like videos better, but I do enjoy text because, again, I think they're all great way to complement each other. So let me just answer a few of these questions you guys had here before we go on to stop losses here. So RG said, what's the difference or advantage versus disadvantage of using a bar chart versus a candle chart? The answer is really simple for that. There is no difference. The information is the same. So for a candlestick, excuse me, let's use a bar chart. A bar chart gives you, and let me just change my tool again. I don't really use the pen much, but a bar chart gives you the open. So let's use this big bar right here. So a bar chart gives you the open, which is that left little thing here. See that left little notch here? It gives you the close. So the open, the close, it gives you the lowest point and the highest point. So again, if we mark that off on our chart and switch to a candlestick, that information is still there. Here's the open, here's the close, the low, and the high. I think the advantage and disadvantage is there is none. I think it's how we visually see things. For a long time I used bar charts, and then I just got kind of, I wouldn't say sick of them, but I just started using candlesticks. It was just more appealing to me visually. So there's certainly no right or wrong. They both show the same information: the open, the high, the low, and the close. And that's what we need. So if you guys like bar charts, stick to bar charts. If you like candlestick charts, stick to candles. I know a lot of people like bars because that's what James uses, so you can compare and it's easier to see things. That's absolutely fine. Again, they're one and the same. All right. So also, let me see. I remember. Okay. I'm going to call you S. I got to get that right, though. So S said, who are the primary active senior members right now on the forums? Again, it does vary. People have stuff. They come, they go. But Seeking Light, always available. Jaru, always available. Let me see who else we got here. I'm just going to go to the forum real quickly. So again, here's the forum, guys. So again, you can see Seeking Light's got his section here, always available. Scroll down here. We got Jaru, always available. And then again, a lot of these members come and go. Habib used to be around for a long time. Had kids, family, things. He pops in and out. Swami's around. He's around probably a good amount. BMAX in and out. So again, people have their things, and you will see the activity in those forums go up and down depending on when those instructors are available. But generally speaking, if you need to get in touch with a senior member, most of them will get to their private messages, will get to their post. But for right now, Jaru's very active. Seeking Light's always active. I'm around. Fiji's around with his questions and answers if you need him to. So again, explore, see who you're comfortable with, and work from there. All right, so I think we're caught up here. Jaru said I'm pretty much available. Jaru's more than available and very, 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 very helpful. All right, so let me see what we got here. All right, so let's do stop losses, guys. It's again sort of a reflection of entries. It's very similar, meaning we have multiple options. So let's stick with the most basic. So we already went over it. So where is the most common and the first place that most of you should start out when learning this material? So let's say you enter on a break of the bar, which we know what that is now. Where would your stop loss go? Top of the pin. Beautiful. So our stop loss would go above the high of the pin. Now, if we're going to use a buffer on the low of the bar, we could also use a buffer on the high. So again, the applications are going to be very similar. So I might, again, maybe not as wide as my entries, but I won't place my stop loss, say, a pip above the high. I might use, 10 to 12 pips or 8 pips or, something like that. So again, you guys see that there's that flexibility there with trading, and that's really the beauty of it. It's actually, when you're new, it's the scariest part is that there's a lot of options, but the more you learn this stuff, you're going to realize that's the beauty of trading, is that you can make something your own. And once it's your own, that's when you're going to find consistency, and that's when you're going to make progress. So again, the most basic stop loss is above the high of the bar. Now, what is the advantage? And this is, again, we have to start to tie in some of the stuff we spoke about. What is the advantage of placing your stop loss above the high of the bar? Okay, so Ellen said not to be stopped. S said the bar's high is the point of resistance. Tony said won't get stopped out too soon. So those are all correct answers. The basic answer I'm looking for, though, just to keep things very simple for now, is because until that high is taken out, right, guys? So if we enter on a break, this bar is not invalidated till that high gets taken out. So price might break down, come up to here, come down, come up, come down. But until that high is taken out, or isn't, it's not invalidated. So this gives us our reference point. So we know that if we enter on a break, it's a valid pin bar. And we also know if price gets above that bar, it's invalidated. So it's sort of like saying my thought is no longer valid, or this trade and this bar is no longer valid, as price has now gone above that highest point. So that's the most basic answer and the advantage to it. Now there's more advanced advantages to it too that we'll get into down the line. But for now, let's stick to that. Let's stick to the basics. So now, where would another, based on the entries and how we looked at our entries, what's another option for our stop losses? So we know one now is above the high of the bar. What would be another option for our stop loss? And think back to our entries. It's very similar. A lot of things are very similar in that manner that we can tie them and the thought process is in. Neb got it. Bingo. So Neb said above the left eye. So not only can we enter on a retrace of this left eye, we might say enter on a break of the bar, but put our stop loss above that left eye. Now, why would we do that? Well, the idea behind that is, well, if that area doesn't hold, then I'm going to get out of this trade. So again, there's an advantage to that and a disadvantage. If you're going to place your stop loss anywhere lower than the high of the bar, you're saying if price gets to that area, you're out. But again, price is not invalidated till the high gets taken out. So it could very well say, come up to your stop loss, take you out, and then come back down. But what's an advantage to placing your stop loss on a retraced area is that, again, you get a bigger position size. So again, the person who sells below the low, stop above their high, their entire stop loss value, their position size is based on this length, whatever this is. So it's about 43 pips or what have you, something in that range. Whereas if you place your stop above this left eye, now you can get a much bigger position size. So it's just like a retrace entry. It's just like a retrace entry where if you do one thing, you can have a good aspect to it, but there's also drawbacks to it. So again, if we put our stop loss above this left eye on a retrace and it hits that, well, this bar is still valid. Again, it's not invalid till price gets above it. So that's another option for your stop loss. It's just like your entries. Again, you could stick it above the high. You could stick it above the left eye. One of the advantages of putting it above the high, Sorry guys, that's my market close. One of the advantages of putting your stop loss above the high of the bar, for me, is that I can use this area now between my entry, which was below the bar, let's say, to move my stop. So as price moves in my favor, I can use this area to move my stop down. That in turn will allow me to manage my risk in a different way. So do I have a smaller position size? Yes. That means every pip price goes, my position size would be smaller than somebody who, say, got in on a retrace. But I have this area to utilize to also reduce my risk. So if I risk 2% per trade, sorry guys, let me just get these people in. Alright, sorry about that guys. So if I risk 2% per trade on this area, well, let's say when price breaks the bar, again, remember, it breaks the low, I might say to myself, alright, we validated the bar, I'm going to now go ahead and move my stop from above the bar to above the left eye, above that retraced area. So what does that do for me if I do that, guys? What does that do mathematically for me? Bingo, guys. So it cuts my risk down. So if I risk, again, 2% per trade from the low to the high, so I'm risking 2%. Let's say I'm risking $100 from this low to this high. If I reduce my stop now, when price breaks, let's say now I take my stop and I move it to here. That's about 50% of my risk gone. So now I only have $50 at risk, or 1% of my account, or 0.5%, depending on what that dollar amount might represent. So again, there's advantages and disadvantages to your entries, to your stop loss placements, and everything in between. And always keep that in mind when you're utilizing something. You wanna know what the goods and bads are of what you do. That way you can effectively use them better. For example, again, not to go into too much detail, there are times when I will not start with my stop above the high because I might be targeting a very short area, and I'm going to say to myself, I want a bigger position size. I'm going to get out quicker. So there's times when I might start with my stop above, say, a retraced area, and then there's times when I started above the bar high. Most of my trades go above the bar. Again, I like that flexibility, or the advantage that brings me in managing my risk. Doesn't make that right or wrong, and that's very important to understand. That's why there is no right or wrong answer. Again, another way to place your stop loss is, and I hear this, is somebody might say, I'm going to always use a 50 pip stop loss. That's a very common thing I get. People will email me and say, Mike, I entered this pin bar, I had a 50 pip stop loss, and I got stopped out. Well, again, is that wrong to use a fixed stop loss? No. And I think a lot of people come from other trading methods where that's something that everybody uses, a fixed stop loss. I don't believe in that because the market to me doesn't really care what my set number is. Again, I like to use what the chart gives me, and that's why for now, let's keep again the basics. A good place to put your stop loss is above the high of the bar, and also maybe at a retrace point. Again, advantages, disadvantages, they're both always there. So, do you guys is everybody good with stop loss? Okay, so Tony said, where do you usually put yours? So Tony, I like to generally keep my stop loss above the high of the bar. It's just something I've done for so long that it's just comfortable for me. But there are times when I don't do that. Just like there's times when I might enter on a retrace of the bar, whereas most times I enter on a break of the bar. It varies situation to situation. I always like to take each situation and apply what I believe is the best logic to that situation. I don't like to put the market into one whole little box and say I have to do everything within that box. Because I believe one of the biggest advantages as a discretionary trader is to use that discretion and apply certain concepts when they're most effective or when I believe they will be most effective. And that same thing goes for exits, which are much more detailed, and we're not going to really hit on exits now because that could be 10 webinars in itself, and most of my webinars that you guys that are archived are based on that. But it's the same thing. A lot of people wish they could just say, I will do this at, when price does this. And that's not necessarily wrong, but I believe in being flexible or again, using that flexibility to learn what your style might be. All right, so let me catch up on your comments here, guys. Right. So okay. So Walter said in this case, there's a lot of confluence by the high. So if we go into detail here, the reason this pin bar is a good pin bar is because it has confluence, and we'll get back to that. But basically, here we have resistance, and we didn't even get into resistance and support today. This is great though. I'm realizing how much I have to do these, and I'm excited because we could take a small topic and really get into detail, and we'll get there eventually when these all are done. So again, just basically here, why is it a good reason to put your stop above the high? Well, we have resistance, resistance. So we have this triple high, triple top. We have this big round number here. So this area is held, right? This is as beautiful as it gets. And putting my stop above here is saying, well, look it, price couldn't get above there once, couldn't get above there twice, and it couldn't get above there a third time. So there's a good chance that this is going to hold. So if I keep my stop above this level, that's great. That'll probably hopefully keep me in the trade. If price does get above this level, there's a good chance that it could keep going higher, and I no longer want to be in this type of scenario or this type of trade. Again, more advanced. We'll get to that stuff as we go on, but for now, let's keep it simple. All right. So another question. Tony said, does volume play a part in a pin bar strength? So I'm going to touch on some of your questions, very basic. Again, I want to keep things sort of as simple as possible. The volume plays no role for me directly, meaning if you go ahead, and a lot of you might do this, you pull up, there's a thing on MetaTrader, and a lot of brokers have it. It says volumes, right? So if we pop that up, look what we get. Volume bars, right? There is no volume, true number volume in the spot Forex market. Again, the Forex market is not a centralized market. So what does that mean? Well, a centralized market means everybody's going through the same exchange. So all the numbers and all the orders come into eventually one point where everybody has access to that information. For example, the U.S. stock market is a centralized market. So when you get volume numbers from a centralized market, those are the true real numbers. There is none of that in Forex. It's not centralized. So these volume levels are not true volume. This actually only represents ticks. And what is a tick? Well, every time price goes up or down, it counts as a tick. So if price goes up, down, up, down, up, down, up, down, and that's 50 ticks, that will show as 50 volume levels. So this to me is useless. Again, that's me personally. Some people may or may not use it, but it's useless. It's not something that I think that if you're new, you should even be thinking about. I personally don't use it, and I never will, especially in the Forex markets. Okay, so let me keep going down here. Okay, Steve said I came in late. I'd like to know if the take profit area was covered. So Steve, we didn't go. We're really going through real basics here. Basically, what we covered today is different ways to enter, different ways to put your stop loss. A take profit or the management of a trade is what I consider way more advanced. That stuff I cover in my regular webinars and my regular material, but we will eventually get to that, but that's 10 or 15 webinars in itself. So for now, I'm keeping things really basic here, and we'll work to those different topics. All right, so let me zoom out here, and I'm going to answer now Joe R's question. Let's just go ahead here and find a good bar to answer that question. So let me think about it going. Here we go. Bingo. So, all right, this is gold. Again, chart's a chart. Don't care what it is. Now, so Joe R's question is, Mike, how do you trade an outside bar, a bullish outside bar or a bearish outside bar? And the simple answer is the same way you can trade a pin bar. So if we want to trade this bearish outside bar, we can use the same method. So let's first say, what is a bearish outside bar? What is an outside bar? An outside bar is simply a bar that engulfs the previous bar. Now there's a few requirements. First of all, we want the high. Let me zoom in here for you guys. So we want the high of this bar to be higher than the previous bar. we want the low of this bar to be lower than the previous bar, and then you want the close of the bar to be somewhere near the bottom of the bar. Okay, so that's what a bearish outside bar is. It's a bar that engulfs and you get a decently strong close. Same thing with a bullish outside bar. A bullish outside bar, let's just find one real quick. Okay, a bullish outside bar is, again, you want a low lower than the previous bar. We'll ignore that little bar there. That's a Sunday bar. So we want a low lower than the previous bar, a high higher than the previous bar's high, and then a close near the upper portion of the bar. That's an outside bar, plain and simple. Now, as far as how can we play it, again, we can play them the same way we play pin bars. So the traditional way would be on a break of the bar, right? So when the low of this bearish outside bar gets taken out, and again, same thing with our stop loss. We can stick our stop loss above the high. We can play bars like this on a retrace. So look where this one retraced to. The previous bar's close and two bar ago's close and the previous bar's low. So again, you might take a retrace entry at a price pivot zone level like this. You might, again, stick up a fib, see if that fib lines up with something. So look at this, 38.2 lines up with this little flip action here. So you might stick a sell order there. Again, same way. And that's what the beauty of a lot of these bars are, is that our approaches can be similar. We can enter on breaks, retraces. Again, you can enter on the close of this bar. All valid options. Same thing with stop losses, right? We can start with our stop above the high. We can start with it above a retraced level. All valid options. Again, you know, the basic way is a bar's not valid. Again, this bearish outside bar would not be valid until it breaks. And it's not invalid till the high gets taken out. Again, here's another bearish outside bar. Same thing. So again, the approach is going to be the same there. So so you guys understand that how that's the same as pin bars? Okay, cool. Just catching my breath here, guys. All right, so yeah, same thing. Again, bearish outside bars. Approach is the same. Now generally with bearish outside bars, a lot of bearish outside bars are a lot bigger, or they're engulfing a large range. So James always likes to say that outside bars tend to retrace more than, say, pin bars. So a lot of people might wait for breaks of a pin bar, but they might like to trade retraces of bearish outside bars. Again, you know, you might do that. You might do one for one thing, one for another. You might only look for retrace entries when you see a level is really good for a retrace. Again, look at this bearish outside bar. You know, we might say, well, look at this high here. Look at this high here. I'm going to take a retrace entry to that area. Again, there's different ways to do it. You could take a retrace to this area too. So there's options there. You know, again, a break is pretty straightforward under the bar. Same thing with our stop losses. You know, a straightforward stop loss is above the high. You know, once you start getting into different areas, that's when you have to start to understand the situation and where you're at as a trader as well. All right, so I'm going to keep reading through the questions here, guys. Okay, so Ron said, are you going to cover different order entry types today? In this scenario, you would place a limit order, so many pips below the break. So I did a video on this, and I think the video covers it as good as I could, but we will go over it. Maybe I'll make that the last thing we go over today, Ron. We're already getting up here in time, so I'll probably end on that. That's probably a good idea, Ron. Let me end on that. Let me just catch up with these other questions. Okay, so JJ said, are you ready to take a full bar stop every time, or you anticipate it will be much less? How often does it happen you take 100% original stop loss? So what JJ's asking is, if I sell this bearish outside bar and put my stop above the high, and this is actually a bearish outside bar I did play, by the way. So if I put my stop loss my sell below the low and my stop loss above the high, JJ's question is, how often am I willing to take a full bar loss, which would mean price comes up and hits my full stop loss? Well, hopefully not that often. For me, the whole idea is to not take full bar losses, but they happen. And I'm not going to sit here and tell you I never have full bar losses. They absolutely happen. The second I enter a trade like this, JJ, so if I enter a sell here and my stop's above the high, I'm accepting that full risk is out there. So if I risk 2% per trade or whatever you risk, when that order first enters and my stop loss is sitting up here, I'm saying to myself, at this point, I'm willing for that stop loss to get hit. So I look at my stop loss as the point that I'm still letting the market get to. So if I leave my stop loss all the way at the high here, I'm saying to myself that I'm willing to watch price go anywhere in this range because I believe my trade's still valid. Now again, I don't like to take full bar losses, and that's why I like to start with my stop above the high. So in this case, and again, I don't want to get too advanced into this yet, is price could break here, and I might immediately say, what's the next logical place that should hold price? Well, we see again this low and high here, or maybe this high. So maybe immediately after price breaks, I move my stop from here to here. So already I'm reducing risk. That's my personal approach to a lot of trading, is what's the best place, the next place to reduce my risk, keep me in this trade. But again, that's more advanced. I don't want to get too far into that. But again, the idea for me is I don't like taking full bar losses much, but they do certainly happen. They happen very little though for me because a good entry usually gives you some opportunity to reduce your risk or do something so you don't have to take a full bar loss. But they absolutely do occur, and I do take full bar losses. Just not as much as, say, 5 or 6 years ago where I would have taken more full bar losses. I don't really like to do that as much anymore. But again, let's only go so basic into some of that stuff for now. All right, so let me see. Yes, it did, Walter. So Matt said, can you show us your daily template for trading? Okay, so I did that at the beginning. I'm not sure if you were here, but my template is this. That's it. Only thing I keep on my chart are my big round numbers. This is it. This is what all my charts look like. So when you see me draw lines for you guys, or price pivot zones, or boxes, and some of that other stuff that we'll get into later, I mostly do that for you guys. I pretty much view my charts like this and make my decisions like this because I can see that picture in my head. But I like a very basic chart. I think a lot of people like to have the moving averages up there. Again, throw up your 365 or whatever. We can go ahead and stick that template in. Again, put your 150 in if you like your moving averages. But this is how I view my charts. This is how it's it. Just big round numbers and bars. Again, 6, 7 years ago, 5 years ago, I had more stuff on my charts. I had moving averages and maybe a little bit more things here. But over time, I just really cleaned it up because you can see this stuff. Eventually, you will be able to see where a moving average should generally be, or I don't need to put up a fib to see where the 50% mark is. Again, put the things on that you need, absolutely. Just always keep things simple though. So don't put too much stuff on there. We don't want to stick on every single little indicator that's in the platform available to us. Only the things that are helpful. Okay, so then Matt said, and maybe this is more what Matt was getting at, are all your pairs opened that you watched? So let's go over that real quick. All right, let's go over that. Then I'm going to get to Ross's question, and I think I'm going to save the order entries for next time, Ron. I did a video on it. I'll point to that video. But let's do finish Matt's question, Ross's question, and we'll start to wrap up here. So for me, Matt, I do a few different things. Let's keep it basic for those of you that are new. Again, where do we recommend that new traders are demo trading? What time frames should you guys be on? Whether you're actually doing it and listening to James's advice or not, I will never know. But what do we recommend for you guys? Yes, bingo. Daily, weekly, monthly. So if you're new, you should be on the daily, weekly, at least. You shouldn't be on the 4 hour, the 1 hour. Again, the material is the same. But the process in building that foundation is much better on the higher time frames. And many of you will never want to leave them because they're a lot less stressful and a lot easier to track. Especially, a lot of you probably have your jobs and you can't be watching your charts all day. Well, this is how I'm getting to Matt's question. Matt, what I do at the end of the day, this is how I view my daily charts. I'll put up one daily chart like this, okay? And what I do is I open the market watch window. So here it is. Hopefully you guys can see that, right? Pops up this little box here. So all I do, this is seriously all I do. So let me move this over so we get that in for you guys. I seriously will take one. If you left click and hold, pull it over, it'll automatically change the chart for you. So I'll just go through each pair just like this. And then if something catches my eye, then I will maybe minimize it, come back to it. But for the most part, each day, this is what I do. And again, I'm looking for standout situations, trades. Obviously, I've been doing this for quite a bit now, so I see things quicker. But, again, I don't overcomplicate it. The process is simple for me. I do this with my daily charts. I do it every day around 5 o'clock, 4:45. I'll probably go ahead and do it a little bit after, or maybe we'll hang out here. We can go through all of them if you guys want. And same thing with weekly. So Sunday comes around, and I'll go ahead and just go through my weekly charts. Just like this. That's it. Just like this. And something catches my eye, I analyze it, decide if there's a trade. If I'm going to trade it, I'll set myself up, minimize that chart, keep that chart open so I can watch it during the week. But that's really, really it. Now, my intraday trading, my 4-hour, 1-hour charts, that's a little bit different. Again, I'm not even going to get into that now because I think since these are beginners, we shouldn't be talking about 1-hour charts, 4-hour charts. But that's how I view daily, weekly charts. Really, really simple. And, I do that in all the markets I trade. So I really keep it simple. Stuff should jump out at me, and I just go through each chart. Okay, so Walter said you start each day at 0. So what do you mean by that? Oh, do you mean I start each chart fresh, meaning I don't have markings on each chart? Okay, good question. So this is something that you probably shouldn't do. I don't keep my charts marked, guys. So let's say we're looking at the Euro Swiss here on the weekly. You might have gone ahead and drawn in, different types of analysis here previously. Maybe you drew your box here. You're marking off your price pivot zone. So each time you get to that chart, it may be coming up and stay there. I don't do that. Again, I do start with a fresh chart because, again, I see that already, but I think it's a great idea to mark up these areas. It's a great idea to mark levels of confluence or areas you want to watch. So let's say we're looking at the USD. This is the Swedish krona, right? And you want to mark areas that are important. So you're looking at this weekly chart. You might say, all right, you know what? I'm going to watch this trend line, and I'm going to watch these bar highs here. So then, if you come back in 4 weeks from now and price is at this area up here, you'll have an idea what to work with. But I basically keep up just my big round numbers. It gives me a benchmark, and everything else I can see visually. But I do recommend marking up areas of confluence. And, you might, stick this over here so it's not in your way. And then say, oh, well, price is at my boxed area. Why did I do that? Again, I think that's perfectly valid, and that'll probably save a lot of you time, too. Because, for example, for me, let's say for this weekly, and this is a little bit more advanced, but I'm not interested in anything price does in this area, right? We're consolidating up here. So when I'm flicking through this chart, I'm basically saying, well, until we hit this or we break out of this area here, I'm not really interested in it. So that's why I can go through charts quickly, because a lot of times you're not going to really be at anything important. But, it's absolutely good if you want to go ahead and mark important levels and confluence levels. Again, we didn't go over confluence this week. Really basic stuff, but just to make sure I get, some of your answers in there. All right. Okay, so Ross said, what is a capital amount you would recommend to start demoing with and trading with real funds? I understand James recommends starting with half your intended amount. So I don't even think James has recommended half your amount. I personally cannot even recommend things like this. U.S. laws are very strict. I cannot give any sort of financial advice or advice that could be construed as financial, which basically means I can't speak about real numbers, but I will speak in general. What I think is the appropriate thing to do is open a demo account, open it with an amount that's reasonable to you, or maybe you have an amount of much higher than you would use, so you could see that, oh, if I'm picky, and I can get $100,000, $200,000 account and take 2-3 trades a month, man, look at these real numbers that it produces. But I think that the most important thing is demo. Make sure you get the 3-month demo process, the James 16 minimum requirements at the least. I even think maybe that should be stretched to 6 months, but nevertheless, a good starting place. Then I always say, that, I wouldn't want to go from demo to a huge real account. I think it's smarter, and I think James would agree with me, to go from demo, open up a small account, then increase that account a little bit. Again, why? There's no reason. You don't need to go from nothing to everything. If you do well, you'll gain that confidence, and you can always add to your account. So I believe it's always better to go from small to big. So do things slowly. Open up. If you're going to go open up a real account, or if I was going to, and I'm just coming off the demo phase, if I have $100,000 that I'm eventually looking to use, why would I personally do that? I would say, let me throw in $10,000 or an insignificant amount, and then see how I do, and then maybe do 3 months on that, then add a little bit, 3 months on that. So again, I think it's better to go small to big, and it just helps with emotions and really see if your method is good, and it will give you so much confidence rather than going from small to big and you just get beat up, and that could make you never want to trade again. So again, I can't give specific advice. Amounts are different to everybody. We have members from countries where $10,000 account is considered huge, and to a lot of us it's not. But again, that's why it's sort of almost irrelevant for me to say it in any way but an abstract way. So again, demo is most important. Start small. Use capital you can risk and willing to lose. But if you're smart about things, you should never be losing too much. Again, like James says, if you have a 30% drawdown, back to demo. Don't try to get that back. It's back to demo. So even if you open up a small account that's pennies to you and means nothing, if you're losing on it, well, it's time to get back to demo and start from square one. All right, so I think that's Ross, and then what did I say? Okay, Matt's question, is that what we're up to? All right, Matt, and I'll just finish out with some of these here. And I'll hang out for a little bit after, guys. I just want to make sure to stop the recording because I have trouble sometimes after we get over the hour mark. But I'll hang out for a bit. Don't worry, guys. All right, so Matt said, how often do you enter daily, weekly, monthly trades on your average month? How many trades can one expect to take once up to speed, assuming the larger time frames only? I think it depends, Matt. It really depends on, your method. For example, for me, overall, I could have anywhere between, say, 10 and 20 trades total a month. Some months I might have 30. Some months I might have 5. I don't really focus on that. And I know that sounds difficult for some people to understand. I try to spend my time focused on what is this a good entry that I would take no matter what else is going on. And whether that turns out to be, I have one whole daily trade for the month or whether I have 10. I don't really try to fixate on that much. What I will say is that, I watch a lot of pairs. I watch a lot of markets now. I watch roughly 80 or 90 Forex pairs. I watch 3,000 equity charts. So the opportunities for me, I feel, if the more stuff you watch, the more you might have available to you. But again, we don't want to stretch ourselves. We don't want to force ourselves to say, I need 10 trades a month. I need 30 trades a month. I need 50 trades a month. We should be focused on a good setup. And I always think if you're struggling, the best way, and I believe this so much that I wish I did this, is take 2 to 3 trades a month. Limit yourself to 5 trades a month or 3 trades a month. And when you see what that can do for you in the long run, you're not going to want to be trading 13 times a day, 50 times a day. Honestly, I don't know many people that, after doing this really enjoy that. Again, some people love to trade low time frames and they have different methods. They're in and out. But if you're struggling, you're sitting there going, I've been demoing for 2 years and, I have 20, 30, 40 trades a month and I'm at break even or I'm a losing trader. If I said to you, can you pick 3 good trades this month? 3 trades. If you watch, 80 Forex pairs, you watch a couple thousand equity pairs, can you wait and sit on your hands for the 3 good trades? And I'm telling you, I know most of you can do it, but it's very difficult. It's difficult to say, this one's an okay trade, but I'm not going to take it. That's a very difficult thing for a lot of people to do. And, that's probably one of the hardest things is being picky and being patient and sitting on your hands. I was chatting with James a week or 2 ago, and we were both looking at a chart. We were both in a trade, and we're like, man, this one was just money in the bank. This was so easy. And, he's like, how do we get this across that people need to wait for these? And I'm like, It's really what people do in between those good ones. That is what defines their trading. And, James was like, it's 100% true. It's not the good ones. I think most people can spot, at least, after 6 months, a year of learning the material, you can spot the good ones. But it's what do you do with the ones in between that one? And if you're struggling, a good way is to focus yourself to say, I give myself 3 trades a month. If I take all 3 trades on the first day, that's it. You got to wait till next month to pull the trigger. And if you can't even wait that, so you put those rules, then you know that there's a psychological barrier there that you need to overcome. So I always believe that looking at solutions in that way is a good way to proceed. And eventually you guys will see, too, how much easier it is to do that as well. So I'm a big believer in that. And again, I know a lot of us have to go through it, and I had to go through it. And, you have to learn by doing sometimes, too. But if I could go back and tell myself a decade ago that advice, I would beat myself up until I listened to it, and that's the honest truth. All right, let me see. I think we're almost done here. All right, let me hit up on Ross's question, and then I'll hang out a little bit. I watch about, I think it's somewhere in the range of 80 pairs or so. I forget how much it is. I really don't remember, but it's definitely over 60 pairs. Again, a lot of them I watch mostly on the daily, weekly, and monthly, and then maybe I watch 35 pairs on the lower time frames. Okay, Ross said, okay, thanks. Just another quick question. Which broker are you using that allows you to use these arrows and shapes? This is actually the arrows and shapes for Camtasia, which is the video recording software. So you can see I have all kinds of different tools and effects I can use here. So that's not part of MetaTrader. As for the charts I send out, and you guys see all those markings, that's actually a program made by Camtasia. It's called Snagit. It's amazing. I mean, for me, it saves me just tons of times. And again, James just got it. I made him get it, and he absolutely loves it. So, again, if you guys are interested in recording your stuff and getting good notes, I think it's like $50, but to me, it's way more than that. So, hopefully that helps. All right, guys, so I'm going to wrap this one up. I am so grateful for you guys coming, for you guys asking questions. I know we covered not a huge amount today and just very basics, but I want to build these as a library, and then we'll have this. We'll have this library of very new trader webinars to go along with all the other information, too. So don't forget, this information's all out there, guys. It's in the forums, it's in videos. But this is a great way for us to interact, and I've really enjoyed this. So I'm going to think about the next date to do the beginner one. I will, of course, keep you guys updated. Make sure to keep in check with the calendar. And, guys, somebody asked me, if I need help, where do I go for help? If I have a question, what should I do? Get involved, guys. Get on the forum. Post in the different sections of the forum. Start a journal. Email people. Private message people. The best part of this site and what James created is the community we have. It is bar none, guys, and I just love it. I love the amount of people that we have that are just willing to help and give advice where they've been through it already. So get involved, guys, and don't be shy. That's the way to figure things out. A lot of us have done this. We know where the answer is to a simple question. So you don't need to spend 10 hours looking for it. Post up. Say, I'm looking for more information on swing points. And, somebody will get it to you. And that's really a huge resource that you guys should take advantage of. So, again, guys, appreciate you guys for coming. I really, really do. And I really look forward to the next one.